goodness. I'm back. I just burned my right thumb. Oh my goodness, look at that. I should take a picture for you guys. It's actually, it's first degree or so, maybe second. It's white. There's some white stuff. I was putting another log on the fire, and I touched the piping hot cast iron because I didn't wear my gloves. I didn't want to. I didn't need to. I was in a hurry. I was coming to talk to you guys, and I burned my thumb on the cast iron. Stuffing. It's all right. Makes the hands tough. Kills the nerves. So when I'm just beating some statist's face into the future and crushing his facial bones and just, really just piling that fist and feeling the crunch of his sinus cavities and his nasal bones. Maybe the numbed nerves that have been burned and cold. Actually, I've gotten frostbite on this very same hand. So this hand is very, very numb. So when I'm crushing the face of a statist in the future, maybe I won't feel it as much. I'll just feel the impact blows as they reverberate up into my right shoulder. And that'll be the extent of that. Welcome back to the Junius Maltby channel. Happy New Year. Welcome, my good friends. Welcome. Glad you're here. The extemporaneous ramblings of a madman. Unscripted live here on the Junius Maltby channel, broadcasting from my bunker as I sit here and look upon the burned right thumb. Isn't that funny? Because I'm talking about my thumb being burned, and you see the molten gold being poured, these bars being cast as a visual here on the channel. This is an article that I thought we'd talk about, and I got some other stuff pulled up. It's going to be fun. It'll be interesting. It's not going to be long. I won't take up your partying and revelry. Be safe tonight. Be good. Be well, my friends. But can you hear me? Can you hear me out there? Out there in the world. On this end, it says the auxiliary mic has a, what does that mean? Is it whatever. It's like negative 25. I can get it up to about 30s. Hopefully you guys can hear me. I hope you can, because I am speaking into the microphone. It should be loud, clear. If not, turn your frickin' volume up or unmute it. Happy New Year's, my friends. Happy New Year's. Stackers and liberty-loving freaks, Ray Finkel says. Welcome, Ray Finkel, long-time friend of the Junius Maltby channel. Good to see you. All of you, Johnny Boy Silver, Phil Settle, Sam Black, Steve Hall, Michael Marini, Quent A. Sentiel, Physics, Hypernova, Blue Dog, Red Dog, Mathodicus, Albrighticus. I'm saying hi to everyone today. Steve Hall, Sam Black, Call of the Wild, Fantanaranja, Call of the Wild, I see you all. Good to see my friends. Trevor Ham. Who else? Who am I missing? Who have I not shouted out? Who here? Phil, I see you. Steve Hall, I got you already. That's it, I guess. That's all of y'all. Welcome. Good to have each and every one of you, and I'm happy to see such a wild collective. Such a psychotic group of friends. I love each and every one of you. Call of the Wild. Oh my goodness. I don't know what that equates to, but I'm appreciative. Thank you for the super chat. I think you're from South Africa there. That's what that is. Yeah, a little help with the hospital bills. Yes, Mrs. Maltby has been racking those up. Buy healthcare, buy stock and whoever makes ivermectin. A little help with the hospital bills. Happy New Year. Thank you. I appreciate it. Happy New Year, my friend. Good to see you. Good to see you. Very humble up. Mrs. Maltby will be very appreciative. I'll let her know. Hey, Mrs. Maltby, if you're sitting on the couch, you should go into the chat. People are thinking of you. The world misses you, Mrs. Maltby. Today's discussion, Unloved and Uninteresting, Gold heads for the worst year since 2015. Had a conversation with a friend about this today. I'm going to break into that. We're going to break into the article. I got a bunch of charts pulled up. Bada bing, bada bang, bada bip, bada bap, bada boop. Boom. Does your mother sew? Boom. Have her sew that. Let's get into it. I talked to my friend. We will call him Douglas. Douglas today brought this up. Good point. Smart guy. Sometimes, even Junius Maltby needs a little motivation. I was talking about gold today, and I was like, man, look at this. This isn't good. It's not good. Not good. I shared with him some key cryptos that have gone up 200, 300, 400, 500, 600%, 1,000%. Insane growth. You could throw a dart at a board and have picked any single one of these crazy blockchain ideas, and you'd be in the hundreds, if not thousands, of percentage gains, right? Right. Gold finishes the year down 4.39%. I believe a year ago it was $18.90 and 80. $1,890.80. What are we looking at today? I know we were green. We were bullish. Come on, get over there. Let's go. Let's see it. What do we got? What do we got? I love the S&P guys thinking they're somebody's. 20%. Those are rookie numbers, my friend. Silver's up 23.35 an ounce, up to 23.35. It was up 29 cents today, 29.5 cents, up 1.28%, back in the 23 range. Can you see it? Let me get that to where you can see it. There you go. You can see that, right? Yeah. Right on. Gold, $18.30 and 50, up $16.40. $1,830.50 per ounce. But you know you can't get it for that. We all know that. S&P ends 2021 with a 27% gain. Dips in the final trading day. What else do we have on the final trading day today? Dow was down 60 points. S&P down 12.55. NASDAQ down 96 points. Okay. Russell down 3. VIX down 0.11. Amazing that the VIX dropped when all of these were dropped with it. It's crazy. You'd think the VIX would have been up today. Whatever. It should be. If they were smart, they would be. Things are getting crazy. Things are getting heated. And we got a retarded president. Now, back to the main article to discuss. Thank you, Quintessential, my friend. I appreciate it. Thanks for the super chat. His hope Mrs. Maltby recovers soon. God bless and Happy New Year. God bless you. God bless all of you. And yes, Happy New Year, my friends. I'm looking forward to it. Accelerate! I was actually thinking I'm going to buy a Surefire. I'm going to treat myself. I need to. You guys are going to laugh. I'm so cheap, Mr. Maltby is, that I've been eyeing a Surefire dual fuel M600. I need to put a light on my Mark 18. All right. If you're not familiar with what a Mark 18 is, look it up. I got a Mark 18. It's beautiful. I love it. It's short. It's wieldy. It is stamped. I know. Laugh. Whatever. Call me names. It's rattle can. It's a badass 5.56 Arkansas Rabbit. But it doesn't have a torch. Doesn't have a light on it because I'm so cheap. I carry a light in my pocket. I've got another flashlight on my chest pocket. And I always figured, hey, if I need a light, I'll just pull one out and I'll kind of hold it different and I'll put my thumb on it and I'll work the light and the torch that way. I need to get a light. I need to get myself a light mounted on this weapon, so I'm going to do it finally. Can you guys talk me into it? I also need another ACOG. I'm very, very glass poor. I do not have good or a lot of glass. And some of the glass I have is dated. I need to buy a TA31 Ecos, a TA31 ECOS. And again, I'm Junius, and I'm too frugal sometimes, and I just figure I'll get one on a battlefield pickup or something, a BFPU, when I'm like carrion, like a buzzard, circling the battlefield and just going carcass to carcass, looking for carrion, and I'll just pluck myself a nice vintage optic from somebody else, along with whatever else was in their pockets. Now let's go on. God, where does my mind go? People that tune in sometimes, they probably hear some of these conversations. They're like, what the hell is wrong with this guy? Whatever. It's a fantasy world. I live in a mad world, a colorful world. Back to what we're talking about. Gold dipped for the year, down 4.39%, right? 4% or so. Well, all I know, it's down. It's not where it was a year ago. I think we finished a little bit better than we thought. During the trading day, it was down a little bit worse. But it's getting some press. The bears are out, but I'm gonna rattle their cage a little bit. I'm gonna shake them up. I'm gonna scare them because the bears went into hibernation for a while. And when you look at gold and you look at a big chart and you look at the big picture, there's no problem. Come on, 4%. Who cares? It took a breather year. It took a break. When an apple tree goes all gangbusters and it has one of those mast years and it just blows out and it breaks a couple of branches even because it grew so many good fruit. Even the peach trees will do that. It's hard this time of year when you're deep in the 20 below days of winter to think of beautiful, ripe, juicy peaches on a summer day. But typically, because I'm one that likes to grow its fruit, when those peaches are heavy on the branch and there's just a lot of them. Sometimes the next year, the tree will take a break. I think gold kind of does the same thing. It has those big years, and then there's years where it just kind of breathes for a little bit. You think that this means it's not going to go anywhere next year? I mean, the bears are out. I know they're picking at it. They're like, oh my goodness, here it is. Gold's over. Well, my friend Douglas, he put it this way. He knows we have these conversations quite a bit. And earlier today, we were talking about this, and I'll just read you. I'll read you what he said. I sent him this article. We talked about some things. He goes, dude, once it breaks out, it's going to be unobtainable. And he doesn't even tune into this channel at all. He doesn't. I know he doesn't. And then he goes, at some point in the future, we will remember the cheap prices for gold and silver and want to kick ourselves in the ass. Another friend of mine and we discuss these things, and we talk about it as if you're going to sleep. Are you sleeping? Are you sleeping on gold right now? Are you sleeping on silver? Did you go back to sleep? Did you stop accumulating because the bad press, the bad numbers, the slow, the pause, it's not reacting to inflation like you thought it would? Well, like what he said here, my friend, he goes, like when I started, this is his quote. I'm going to read it verbatim. Quote, like when I started and gold was 600 an ounce, it's up 3x from there. Yeah, it is. He's up 3x from there. That's pretty darn good, especially when you take a big position. So he's doing fine. And then he says, and there's never been so much money printing, right? There's never been as much money printing as now. It's out of control. It's out of hand. It's out of control. It's out of hand. So he knows where it's at. He's not worried about it. He's not. You shouldn't be either. I'm going to show you why. Let's read the BS first, and then I'll give you the Junius side. Booming equity markets and crypto starved gold of attention. Was that it? Are we sure about that? Can you prove it? Can you prove that to me? Was it other things? Was it suppressed, perhaps? Was there a spoofing taking place? Were banks selling it out the front door, buying it at the back? Was there manipulations in numbers? I don't know. They've been caught at that before. Now, J.P. Morgan, a very trustworthy source of information, right? J.P. Morgan. They forecast a bigger drop next year as the economy recovers. Of course they do. Of course J.P. Morgan forecasts another drop. Pause for a minute. Take that in. Take that beautiful molten. I mean, don't you want to just run your hands under that and just splash it onto your face? Just kidding. Can you imagine putting your hands under that and just splashing it about? The molten gold. Talk about getting a burn. Molten gold pours from a crucible into a mold during the casting of ingots at the foundry in Krasnoyarsk, Russia. That could bring up an entire other topic. They know what's going on. They've been pouring gold like this. It's funny. Anytime you see really beautiful pictures like this of gold being poured, it's in Russia. A lot of times. And many of the ones I've seen are in Russia. Now, gold is poised to end 2021 the same way it spent much of the year. A little changed and tottering along. Little changed and tottering. Yeah, remember, it's just flat. It's been just stumbling through the year. It's a lost year, if anything. Somewhere it's been in the vicinity of 1,800 an ounce. Well, that's pretty freaking good. That's a pretty good area to be in. Especially when you look at the past. I remember when gold was $256 an ounce. If some of you guys are old on the channel, I bet you remember and have even history in buying gold for what, $42 an ounce? If you can, share the comment. I know there's some silver-haired, distinguished gentlemen on this channel who have much more life experience than I do, who can accurately recall memories of themselves purchasing for fiat gold, whether it was Krugerrands, British sovereigns, Dutch guilders, ducats, or francs. They bought themselves gold for, well, $40 an ounce probably. Good for them. Here we are years later, it's $1,800 an ounce. The dollar still being devalued, debased every single day. Now, after a tumultuous start to the pandemic that drove gold to record levels, boom, not true, pause. That's not what drove it there. It was on the way there prior to that. And I can show you charts to prove it. Gold was already smashing records and parabolic in a sense, rising year over year over year by multiple percentage points, 20, 30, 40%, 20%, 10%, 8%. Doing really good. Really good. For years, decades. In the last 20 years, gold's only really had a couple of down years. We'll look at that in a minute. I have a really great chart pulled up to show you guys. So get your glasses on because there's some visuals here. I don't think that COVID drove gold up at all. As a matter of fact, do you guys recall the exact opposite took place? There was a point during the crisis and the new information, the news was coming out, and I recall gold and silver plummeting. They did the opposite. Created a buying opportunity, right? Absolutely. So we're not going to agree with this article. It's false. It wasn't the reason that gold dropped, or it was the reason. It wasn't the reason gold was going up at all. People weren't buying gold because of COVID, I assure you. And the price wasn't rising because of COVID. It was rising because of an increase in the circulating amount of dollars and other fiat. Now, after a tumultuous start to the pandemic that drove gold to record levels in 2020, the metal famously touted as a hedge against inflation, I inserted that, but it says the same thing, as a hedge against rising prices, has failed to capitalize on this year's scorching hot inflation. Pause. We've studied this in the past. We've looked at other historical events like this, where gold and silver both took a while. They were delayed in reacting to the scorching hot inflation. Isn't that interesting that it's talking about it now as scorching hot? That's a new one. I could do a whole video on that, just that. First it was transitory, then it was surging, then it was persistent. Now it's scorching hot. Now investors appear to have lost interest, leaving gold trading in tight ranges for weeks on end, while exchange-traded fund holdings trickle down. Good. Gives you and me more time to be in this and be right and be early. I mean, you should actually be thankful. You really, truly should. You should be happy that gold is doing this right now because it truly should be priced out of your possession. Gold should be beyond the reach of any person that's commenting in this channel. That's where it should be already. Contemplate that for a minute. Gold should be so expensive that myself and you should not be able to touch it. Spot gold has fallen almost 4% this year, on track for its biggest annual decline since 2015. A stronger US dollar. Is it really stronger? Everything costs more money. Come on, guys. Do you really think the Forex markets and the strength of the US dollar, among other things like that overseas, does it feel strong when you go to the grocery store and you're looking at $30 for just some cut of meat? When you look at a gallon of milk going up $1, when everything you buy is more expensive, when the price of gasoline has doubled, when propane and natural gas have gone up 100%, when everything that you need costs more dollars, does the dollar really feel stronger to you? I'm asking you a serious freaking question right now. Explain to me how the dollar feels stronger for you when everything you need costs more and you have less dollars. Thanks, one ugly man, for the super chat. Happy New Year, you bunch of animals, he says. Happy New Year to you, ugly man. Good to see you, by the way. Welcome. Familiar face. A stronger U.S. dollar and the threat of a pullback in stimulus by the world's major central banks have deterred many investors who saw better opportunities in surging equity markets. The exciting booms and busts of Bitcoin and NFTs and all the other garbage, you know what I'm talking about, often touted as a digital equivalent to bullion, also captured attention. Here's the tepid year for gold in a chart. Gold meandered this year after touching a record in 2020. There it is. Just wandering about, just bouncing around. It did touch a record in 2020, though. Gave us a teaser. Now, gold started the year under pressure, dropping 10% in the first quarter. Vaccine success spurred hopes of a quick recovery from the pandemic. Oh, yeah, and then Brandon and the Democrats secured the Senate, blah, 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 politics, BS, BS, blah, blah, my line, bullshit, bullshit, my line, bullshit. Continuing. Little interest. Investors have largely cut back their gold positions this year. Just this year, though. Lack of interest from financial investors. You're going to rely on that? Come on, these are the same idiots that bought mortgage-backed securities hook, line, and sinker and lost their arses back in 07, 08. So why would you follow financial investors? Does anyone really care what? I mean, every financial investor that I know of where this is their job is an idiot. I've never met a smart one. You guys might. I know some of you might even be in that trade, and you are smart. But I can tell you, I met a guy that couldn't sell shovels to gold miners in 1849. This guy couldn't sell, he couldn't sell ice in the desert. He wasn't a bright guy. Kind of a little slow on the uptake, you know what I mean? Good guy, nice guy, means well, but not too sharp. A few French fries short of a Happy Meal. All right? You know what his job was? The guy's a financial advisor for a major investment firm. Has a desk, has a computer, helps people set up their portfolios. Doesn't know the first thing about the economy, what's going on, or what's taking place. Nothing. Couldn't tell you. He'd rather watch a football game. Typically, that's what he's doing. I know the guy. Now, who's crucial to driving those rallies? The investors. They're not, all right? They're not. I'm not going to rely on them. Nobody should. Now, holdings and exchange-traded funds have dropped almost 9% throughout the year. Again, they make bad decisions. They get beat up. They're running with the fads right now. They're chasing the fads. Now, while hedge funds trading COMEX futures have kept their bullion bets muted. I'm going to show you why these guys are wrong and what's going to happen here, what I think is going to happen. Now, while the prospect of monetary tightening hurt gold's appeal, monetary tightening, we're looking at them raising the interest rates at most 0.75% over the course of the entire next year. Okay? They're barely considering cutting back on their buying of assets and bonds. Nothing's changed. The mechanics of this economy have not changed. The fundamentals have not changed. The debt has not changed. You know that. I know that. They all know that. Nothing has changed. The economy's still broken. They're still printing off dollars every single day. The Fed is buying up the bonds the Treasury prints. They're just monetizing everything, just issuing currency like it's nothing. Trillions upon trillions of dollars. We know that. The opposing drivers have left bullion hovering almost magnetically around the 1800 mark. Good. Consolidate there. Get tight. Coil up. Burst forth. I know where you're going. I know where it's going to go. While that's a historically high price, it will be disappointing to those who enjoyed the surge to a record in 2020. However, the equilibrium between dip buyers and sellers may not hold for long. More gains in the dollar could spell misery. Good. We'll buy it up. I'll tell you what. Why don't you dump all that gold on the market to $20 an ounce? All of it. And me and all my friends here on the Junius Maltby channel will buy the Fed out. We'll buy it. We'll take it. We'll take that 8,133 tons or whatever it is that the U.S. government sits on. We'll take the whole thing. Tell you what, I'll give you $1 an ounce for all of it. Me and my friends. How about that? How do you feel? You guys, Junius Maltby community, would you guys like to own 8,133 tons of gold collectively? We'll divide it amongst us all. Huh? That's about since there's not many of us that actually participate in the channel, that'd be a couple tons apiece, I would say. A few tons of gold each. I think we could handle it. I think we could scrape some dough together. It'll never happen. They're not dropping it. It's not going to happen. And the thing is, I know, like I've said, multi-decade bull run. I'm not worried about a sustainable gold rally or what's going to cause it. I already know what's going to cause it and that it's here, it's coming. I don't care about what BlackRock says. See, BlackRock, they actually have a positive take on it. But I don't need them to tell. If BlackRock had a negative take, I wouldn't care. JP Morgan has a negative take on gold. Do you think I care? Do you think I value their opinion? No, not one bit. I don't put any weight on anything these financial investors, advisors say or any of their minions. BlackRock, Evie Hambro said earlier this month that gold could climb in 2022. And I would trust them more than JP Morgan probably when it came to this opinion. Driven by a combination of real interest rates, U.S. dollar performance, and demand for haven assets. However, analysts at JP Morgan Chase see gold coming under more pressure as a global economic recovery continues. Nobody cares about a recovery. You see, all of that money is going to start getting spent. And that recovery is going to translate into capital flowing towards gold. They don't understand the fundamental principle that capital will ultimately settle in gold, and that's where it's flowing. and it will drive gold prices up. Now, I'm going to take advantage of this ignorance and their stupidity, and I'm going to allow them to collapse it, drop it, or whatever. If it does, we will step in and we will buy it. Forecasting that they forecast an average price of $16.31. Now, on the last day of 2021, gold edged up 0.7% at 1827.10 by 1:38 p.m. We all know that it closed a little higher than that, about 1830 or so. Now let's get to the charts, my friends. Can I just show you some? Do you guys have time? Do you want to stick around for a little bit? You guys here for a while? Good, good. That's what I was hoping you'd say. Now let me open it up. If I can get this mouse to work. Here we go. Here we go. A lot of charts. First, we're going to do this. This is Macro Trends. A cool site, fun. Has some good stuff. I've actually mentioned it before. You know what's funny about this site is I can't figure out for some reason, Mrs. Maltby does the bookmarks because I'm actually that dumb. I don't know how to bookmark on this computer real well. I've tried to. I hit the star to save this page, and I always have to Google it to find it again. But here we are. I found it earlier for you. I did the work. I was sitting here banging around on this keyboard. Now, this is a 100-year historical price chart for gold. Inflation is typical in tan or gray, whatever you call it. And then you've got a kind of a compressed chart. I don't really want to look at that as much. I can see where it's going. Look, higher highs, higher lows. It's moving up from, way back here in 1917. We'll go to 1950. We'll go right here. Let's go to 1971. That's perfect. See that where 1971 is? It's never gone back, and it's only gone up since then. Yeah, it's some ups and downs, but ultimately from 71 on, ever since Nixon closed the gold window, it's been popping, just popping. Now come down here, because they talked a lot about this 4% down, right? Like it's a big thing. Everyone's freaking out because there it is. It's on the books. You see it? Let's zoom in. I'm going to get that right where you can see it. This is a great chart. This is fun. This is the chart that you want to show your friends, the ones that think they know a lot about gold and are negative on it. This is one for the guy that comes around, the little troll that we have, like our little resident Klingon. He's like that one hemorrhoid that just won't die and fall off. That one, the guy that's in the comments, the troll. Let's show him this chart. Here you got the year 2021, right? We'll start there. Average closing price was $17.98. The year opened at 1946. The year's high was 1954. The year's low was 1678. The year closed at 1814. We finished the year down from the beginning, 4.27%. But here's something that's interesting. A lot of people during the course of 2021 might have bought gold at the 1678 range. Or anywhere in the 1700. The average price was 1798. So it closed well above the average. So many people probably bought gold around anywhere from 1678 to 1798, which means they're still up. They're still in the green, and they're well in the green. But check this out now. Last year, gold was up 24%. So if you subtract the 4 and the 3% from that, 24.4%, gold's up 20% still. Still, that's over 10% a year. That's solid. That beats a lot of stuff. As a matter of that 24%, that's what the S&P only wishes it could do sometimes. 2019, 18%. Let's not look at the green years. I want to add up the down years and show you something interesting. Going way back. Let's count. Would you count along with me? Come on, let's take a time traveling ship. We're going to go back to right about where were we at here? I talked about the beginning of the decade, 1998, 99. And we'll start there, year 2000. How about that? We'll use the year 2000, 22 years ago about, right? Down 6.26%. Down 6%. A lot of up years after that, though. Many. 1, 2, 3, 4, 5, 6, 7, 8, 9. Over a decade of up years. All of them double digits almost. You're looking at 30%, 27%, 24%, 5, 17%. Oh, then we got a couple of down years. We're down 2013, 14, and 15. So we got 4 down years now, total. 4. 4 years in the red. All the other ones, massive, massive green years. 2018 gave us a red year. That's 5. 2021, that's 6. So in the last 22 years, in the last 2.25 decades, 6 years have been down. Now, I've added all this up many times before and done little math games with you. I've added all the up green and all the negative red, and we've averaged each out. And overall, the chart's clear. Gold's up significant, hundreds of percentage points. It's not a bad place to park your wealth. Anyone who says that is stupid. Truly, they're just exposing their own ignorance, because it's not. The math and the charts show us that it's not a bad place to park your wealth, especially if your intent is knowing it's not going to send you a dividend, knowing that it's not going to miraculously mail you a check or anything, or multiply or split, knowing that it's just parked there, but maintaining value over time as a store of labor, as the ultimate extinguisher of debt. It's a liquidity anchor. We all know that. Unit of account, unit of exchange, medium of exchange. It's money. It's money. It's gold. It's been around for 65 centuries. It's never gone to zero, and it won't. Once you understand the facts and you buy it and you're a holder of gold, the peace of mind is there. You've got it. It's physical. It's done. You don't need to worry about it. History's on my side. It's been around a while. It's not going anyplace. It's a no-brainer. It truly is. It's the easiest thing you can do is buy gold. Look at some of these charts. Gold prices versus the stock market. Now, gold is in the orange. Blue is the stock market. Now, as you can see, they were pretty close for a long time, marrying, intertwining all the way up through the 80s. They started to bifurcate right around here, about 1984. Well, they changed the way economic numbers are measured. There's all kinds of intrusions that the government's taken, of course, and punishments on those who try to hold and own gold. Also, all kinds of gambling incentives and weird, bizarre trading behavior, among other things, right? So it splits. Now, you see the markets go way up here and gold sitting way down here. But they'll come back together. Once they're going to start merging, the markets are going to drop. Gold will rise. Here's gold versus silver prices. You can see them kind of separated here a little bit. Kind of a bizarre chart, but you guys check it out. Let's go back next 30 years, last 30 years. Let's go there. Gold and silver of the last 30 years, kind of humming along here, just touching, and then they've really split right back here, right about the time they started really spoofing and stuff. But they kind of started separating. They're still following each other, but the gold-silver ratio, it's pretty spread out. That's going to change. We're pretty confident in that. Check out the Fed balance sheet here. Look at this. Versus gold. Let's go to the last 30 years. Look at this. This will freak you out. And the last 20. Where's the last 20? Give me that. Come on. The last 20 years. There we go. Fed balance sheet is in blue. Gold is in orange. You can see these hockey stick moves here. There's the financial recession. Look at that there. Look at all the money they printed there to get us out of that trouble. Or they thought they were, right? You can zoom in. You can see how small it is compared to now. Now, that's the 07-08 crisis. Can you guys see it? Let me zoom in. Come on, you guys got to see this better. Lower this a bit. There you go. Now you can see it. I got to make the screen a little bit adjusted for you. I want you to be able to see the dates. So if you wanted to, you could even screenshot this. Look. There's the last crisis, 07-08, right? Look at them expanding in the Fed balance sheet in blue. Price of gold here. Look at where we are now in 2020. Look what they did. Look what they've done. Do you see the Fed's balance sheet? You know gold's going to catch up. It just hasn't yet. This is probably the most important slide. Oh, I'll do that, physics. Physics says, Junius, national debt clock for the end of the year. Let's do it. We'll do it. Yeah, after this. That's a good point. I like that idea, physics. Remind me. This is a cool chart because, look, gold historically has followed the Fed's balance sheet, all right? Dating all the way back. And, come on, you dumb computer. It just hasn't done it yet. It's trying to. It's tightening up. It's going to rocket to catch up with this blue mark. Okay. The Fed balance sheet versus gold. This chart compares the monthly percentage growth of the Federal Reserve balance sheet, U.S. Treasuries, and agency MBS against the price of gold back to 2004. Now, they were very tight before. Very tight, almost arm in arm. It will react. And when it does, you better be ready. You better be ready for about 1,000%. You better be ready. You better be buckled up. We've looked at this numerous times. We know where gold is headed because we've looked at it. We've looked at it for years. Look at these charts. Every single chart that you look at shows the same idea. And once you understand the background, the fundamentals, what's driving this, why gold moves the way it does, and you realize that the opinions of these people that practice modern monetary theory, these progressives, these Marxists, leftists, your average boomernomics, the Dave Ramseys, the clowns, the people that, put their makeup on, their big red honking nose and a wig and their giant red shoes and go clobbering around the city, flip-flopping around, worshiping fiat. They can't comprehend or grasp what are really simple concepts. I think they like to overcomplicate things. Or maybe it's that the concept behind what's driving gold and what historically pushes it in the direction that it's going still, maybe it's so simple, they just don't think that it's possible. It's almost like it's too easy. It has to be more complex than that. There's no way that's the way things are. It's too simple to understand. Therefore, it can't be true. And is there a label for that? Something? Is there a condition? I mean, I've showed you the charts. Only 6 down years, ladies and gentlemen. 6. In the last 22 years. It's just green across the board. The charts up. Bull flags, consolidation, tightening, higher highs, higher lows. What is it? What is it about these people? What is it about these people? I'm going to go to the U.S. debt clock because that is what we wanted to do. Physics hypernova. Let me get it up here for you. It's the end of the year. Happy New Year, my friends. Is it New Year's where any of you guys are at? I gotta get Mrs. Maltby some food here soon. I'm gonna make her some pasta tonight. Some good old Junius pasta. There's your debt clock, my friends. 29 trillion, 484 billion, 576 million, 840, 50,000. It just keeps going. And then you've got the total. Where's the one I like? Total debt 85 trillion. There's the U.S. total interest paid 3 trillion. Interest per adult 13,578. Looking pretty bad, my friends. Looking pretty bad. Pretty rough. Not worried about it. I don't think you guys should be either. We're going to be fine. Everything going to be okay. Everything going to be okay, Alice. Everything going to be okay. All right, my friends. Everything's going to be okay. Check out the last video I did earlier. If you didn't check it out yet. That was another live today. But thanks for tuning in. Thanks for being part of the Junius Maltby channel. And please hit the like. If you're here and you like the content, hit the thumbs up. And go back and hit the thumbs up on the ones you've watched before that you forgot to hit the thumbs up. Leave a comment down below and explore the video descriptions. You'll find many links in there to the Teespring. Maybe you could do Mrs. Maltby a favor, show her some support, and go look at some of the Teespring art that she's produced over time and put her heart into on the channel. The link is down in the video description. I always forget to throw that out there and mention that. Go check out some of the links down below. You'll see them. They're in every video. And Thanks to all of you who support this channel, motivate this channel. Those of you who are on the Patreon side of things, those that communicate with us, email us, correspond with us, the friends of this channel, those of you who are channel members, thanks for signing up and being a channel member. Anyways, have a good night, my friends. Thanks for being part of this channel. I appreciate each and every one of you. And here's to another year, a new year, the year 2022.